You are listening to ChartingWealth.com for Tuesday, the 24th of November, 2015. What do the markets look like as they closed on Monday? Well, we have an uptrend in the long chart. In fact, it revived itself after several days of down moves starting on the 6th of November, and it moved down over in the two-day chart until the 16th of November. Then on the 18th, we saw it turn around, and it's been moving up since then. So when we go from IYY, which is a total market index fund, so it tracks all the stocks in the market, we go back to the 4-hour chart. That's our half-day chart, our smaller chart. What do we see? Well, we're above our two-day trend line. It's not a very good two-day trend line. It's only 4 days. We like to have 3 candles at least connected so we feel good about our two-day trend line. But we do have a crossover going up on the short chart back on the 18th in the afternoon, and we continue to see the market rise up. However, what did it do at the end of the day on Monday? We got what's called a doji. A doji is where you have the same amount of up movement as down movement, and you have what looks like a cross. It means, according to the Japanese candlestick masters, that you've got a great deal of indecision in the market. So we have confirmed up moves on the short chart, confirmed up moves on the down chart, on the long chart. That is the 2-day versus the 4-hour. So we've got confirmed moves on both of the charts, but we have some real indecision at the end of the day on the short chart. Now, what does that mean? Well, we haven't seen that in a while. When we last saw it back on the 11th of November, what did we see happen? Well, we saw a brief spurt of an up move starting on the afternoon of the 10th, sort of sideways motion, but then we saw close to a doji. It's really, well, you call it a hammer, but that signaled a down move, which we then saw. So let's just continue to watch, see what happens. Although that down move, remember, it did not cause a change in the long term, that is the 2-day up move. As you can see, you might say, why? Well, that was because we never crossed our MACD going down. For those of you listening by audio, I'll explain to you what we're seeing. We basically see an up movement where the charts crossed over on the 2-day chart back on the 5th, the candle on the 2-day chart on the 5th, and continue to move up till we saw some sideways sliding around the 6th, a down move through the 16th, but that never crossed going down, market slipping sideways somewhat. Now remember, we love our MACD. It is a fabulous indicator, but it does not work in sideways slipping markets. So let's continue to watch and be careful and cautious. You're going to really see this play out, how the MACD loses its effectiveness when we get to gold here in just a couple of moments. So we're going to now go to the S&P 500 as represented by the exchange traded fund SPY. It looks very similar to the big charts as it does most of the time. Why? Because it's the heavyweights in the market. It's the 500 big companies, lots of the market's volumes depicted here. We see it again is in a confirmed up move. The market had slid over down and then started moving up, never crossed the MACD as it looked like it might do on the 16th. Although something important to pay attention to, our derivative oscillator is negative, even though we see up movement. Why? Because the up movement has not tracked back yet the down movement. That is one reason the derivative oscillator stayed negative. So pay attention to that. That can be important to us in showing this move might not be sustained. You see the same thing on IYY. So let's pay attention to that now. We're going to range out to the 4-hour, the half-day chart on the SPY. And what do we see? Well, we see the same kind of doji at the end of the day. Still above the 2-day trend line, so we're going to pay close attention to that. Losing momentum in our derivative oscillator also. So some caution here. Some caution here after the up moves. Now let's go to the Qs after we range back to our 2-day chart. And again, the Qs is up for the last 3 2-day candles, so 6 days. But we do have the derivative oscillator still in the negative, and we're real close again with a potential. We've tracked sideways for a while, and our MACD is just not doing a whole lot for us right now. If it crosses over going down, that would be a move that we're seeing a sell-off in the Qs. What is the Qs? Of course, we talk about it every day. It's the NASDAQ 100, the technology stocks. Technically, it was down 0.29% for the day, and SPY was down about half that, 0.11%, and the total market down just a little bit, a 0.09, so not even 0.1%. So we'll continue to monitor. On the Qs, let's drop to the 4-hour chart, see what we see. And again, we see it had crossed over back in the afternoon of the 18th of November and continued to move up and sort of, it made its final up move in the morning of Monday, the 23rd of November, and then backed off in the afternoon for that 0.29 loss, 0.29% of a loss. So that's where we end up on the Qs. Now where it's going to get really interesting and where our MACD does not help us a lot. When we go to gold, what do we see in gold? We're in a confirmed down move on the big chart, crossing over going down on the 2nd of November. We've continued to see 2-day down moves, although the market since the 18th appears to have sort of hit a bottom. It's not gone below the bottom it hit back on the 18th. The low was 101.98. The low on the daily for Monday was 102.16. So what's gold doing? Well, we see this confirmed long-term down move, but what's our favorite chart on gold that has worked for us for so long? I hate it when things end up losing their power. What do we see happening with gold? Well, it crossed over going up back on the 12th. Looked like gold had bottomed out. And what has it done? Well, it continued to slide sideways and then lost, then moved up a little bit, slid sideways more, and then lost. It's still not gone below its lowest low, which looks like that was reached again, 101.98 on the 17th. Its lowest low as of Monday was 102.29 or 102.16. So the problem, though, is the MACD, the moving average convergence divergence indicator, is a great one in a market where you've got things moving up and down. But when the market starts to slip sideways, the MACD, because of just the mathematical calculations used in it, ends up losing a lot of its ability to really tell us just what's going on. We do see that the derivative oscillator is losing some of its speed. It had built more up, but it did that as the market's sliding sideways. Again, we've trusted our MACD for a long time, and it's been very good to us. It has not been working over the last few days, but just a few days doesn't mean it's a dead indicator for us on the 4-hour chart. But let's continue to watch cautiously. It does appear to have hit a bottom around 101.98. So what we will do is we're going to go ahead and we're going to draw in a bottom for ourselves. We're going to put in a hard horizontal line there at 101.98, and we're going to use that to see if the market actually collapses below that. Hopefully it will not, but we're going to use that as a hard bottom to see. Maybe it'll bounce off that and our MACD will have redeemed itself and recover. We shall see. But that is where the markets ended up for us on Monday, the 23rd of November, as we go into Tuesday, the 24th. Hope that this has been helpful. We always love to hear from you. If you don't have our 15-minute How to Read a Stock Chart video and our layout to be used on freestockcharts.com, and of course the operative word there is free. These are great charts. It's just a fabulous, fabulous application that you can use for free. You can also sign up for their paid service. But as you're learning, hey, learn for free. That's what this is all about. Again, we are not a stock calling service, as we always give you that caveat. We are an education company. We love to hear from you at chartingwealth.com. Go there, sign up for our daily newsletter. You'll also receive once a week our weekly review and forecast, and big bonus, you will get our 15-minute How to Read a Stock Chart video plus you will get our layout so that you can use it at freestockcharts.com. Just hit the links, take you right where you need to go. Thank you so much for joining us from chartingwealth.com.